The US, Israel, and Iran are now at a crossroad. We are all trying to figure out what is going to happen next. Is it going to be something that is closer to a World War III? Is it going to spike oil prices? Or is it going to be the thing that sparks the next stock market crash? This also leads a bunch of people to think I need some very complex strategy to get myself into protection mode, protect my portfolio, protect my funds so that I can be in the safest position possible. Here's the thing, I understand there's a whole lot going on. Much of it is not in our control, but simplicity at this point in time is your best friend. Let's go ahead and break it down. Disclaimer, all right? It is 2:45 p.m. Eastern on Monday, all right? By the time you see this, it will not be that time. For a lot of reasons, I gotta edit this video and post it, all right? But I say that because the time that I was researching and putting this video together, there was a notification that I got that Iran responded. That wasn't something that was on my bingo card, all right? So that's number one. This is a developing story, all right? That's disclaimer one. Disclaimer two is I'm going to lean into my expertise in economics and finance. So what we are going to talk about is how you can manage your emotions and manage your portfolio through all of the noise. What I'm not going to do is say, here are the top 5 stocks to make a whole bunch of money off of war. That doesn't make me feel great. That's just not me. However, what I think is a more useful skill right now is knowing all the noise. How do you manage yourself? Because it is unpredictable what is happening over there, and all this could be resolved with a phone call for all we know, right? So how do you manage yourself in times like this, and what do we do next as investors? That is where we are going to focus today. So the first point is this. The ball is still moving, and it is moving in a way that you are not paying attention to. Yes, we know that Israel, Iran, and the US, there is a conflict, one that is currently evolving. And that is the focus, but there is a second thing that is right behind it that we are not focusing on. So let's first start with the first one. We know there are strikes. We'll see how that evolves. So that is one thing that may or may not impact the stock market. As I was recording this video, the stock market hadn't truly moved. There are at least 2 other options that could shake the stock market. Number one, this could impact oil prices. Iran's a major oil producer. They may decide not to produce as much oil. That could shake the stock market. We'll see. They could also decide to blockade or change some trade routes, and that could be something that could disrupt supply chain, disrupt certain businesses, and that could end up hurting the economies of certain nations, right? We'll see how those things play out. Those things are possible. We'll see what those responses may or may not be. But here is why I don't think it makes sense to look at all of that, react to all of that, be afraid of all of that, and start to steer your portfolio very hard in one direction. That is because as soon as Monday, some of those major tariffs from Liberation Day start to hit. And on July 9th, some of those higher tariffs, the 50% tariffs on Europe, are also supposed to hit. Unless there is another pause or another delay. That means that while we are all focused on what is happening in the Middle East, there is also going to be another issue, another war, if you will, a trade war that the stock market rather, is going to begin focusing on in just a few days. So you steer your portfolio hard one way, and that's what we're focusing on, and then boom, from washing machines to steel and everything else, that jumps up in price by 25 to 50%. And then you steer your portfolio the other way from what's going on there to steel, oil, industrial, let me tariff-proof my portfolio. We haven't been talking about tariffs for the last several weeks because that hasn't been in the news cycle. Quick time out. I know we've been talking a lot about investing today. However, if you don't know where to start or you haven't started yet, I have a free guide on how you can buy your first stock in just 20 minutes. To get that free guide, check out the link right here. All right, back to the video. People forgot about it, right? What you don't want to do is keep swerving your portfolio left and right based on the headlines. That is external forces, right? That is external noise telling you what to do when it really should be the opposite. You have to decide what your strategy is and then decide how you want to react, if you want to react at all, to what is going on. That is the better way, in my view, of how you should invest. I'm going to show you exactly how I do that and why I do it that way as well. So second piece of this starts to get a bit more interesting. So we talked about that internal and external part, right? And we talked about simplicity to start the video. How do we start to build some of that simplicity? We've actually started some of this talk just a few weeks ago. A part of it, we've said this before, but there are new subscribers all the time, is index funds. That is buying a certain segment of the entire stock market. So the US stock market, you are buying the entire US stock market, right? That's what an index fund essentially does in the simplest definition possible. But also in a time like this, it might make sense to buy certain segments of the European stock market. For example, at the time that we did a previous video, I will link to that video somewhere over here, where we had talked about how European financial stocks were doing quite well. So it might make sense to say, look, instead of me trying to say, oh, let me try and find the best stock that's profiting right now, and then 2 weeks later, let me try to find the best tariff stock, but then the president decides to delay it again. Like, that's, you cannot try and predict and invest for the unpredictable. That, you're not gonna win that game, because what's happening right now, there is no strategy. What they are doing and what is happening doesn't make sense. So you're not going to win that game. So instead, I like to say, and this is an example I think I read from the John Bogle book on index funds, is instead of trying to bet on the team, buy the court. It doesn't matter what team wins. So in a time like this, where you don't know, there is no stability. Every other week is a new crisis. Every other week is something crazy popping off. Why try and deal with that when you can just say, look, I'm gonna just buy this index fund, buy this fund, and buy this fund, and y'all have at it. Y'all gonna do what y'all gonna do. Whoever does what, I'm gonna win in the end, especially if I hold for the long term. That is a better way to approach it in times like this, where you don't have to sit here and worry about, should I start buying oil stocks? Should I start buying tariff-proof stocks or whatever? Don't worry about it. Just get you some index funds and call it a day. So if you want to know the best ones, go ahead and check out that video that I linked earlier. But there's also an alternate approach, or you can mix these two things together, and that is what I have done. That is, in addition to index funds, y'all know I love me some index funds, but I'm somebody who, I've said this multiple times, I only touch my portfolio twice per year. And this is actually, ironically enough, the time of year that I do that. So we'll be talking about that later this week. However, this is the reason why I buy in December and make those changes in December and make those changes at the end of June. It is right around the end of June right now. But this is why things like Netflix, Honeywell, and others, I bought those. I held on to them, and I would say of all of the stocks that I bought, I would say all but one that I can remember right now are all positive, and they're all up at least double digits. We will do a video later this week to now show you all of those, at least as of today, double digits. We'll see what happens before this week is over, but most of those are double digits from the ones that I bought in December. Why is that? Well, number one, I have a very good process on how to pick stocks. Guess who had done a video on how to do the whole process? We did that, okay? We talked about the research process. But more importantly, all the things that have happened, right? All of the tariffs, all of the whether we're gonna cut rates and all that kind of stuff. I just sat back and said, hey, that's wild, that's crazy. I'm gonna let it ride, and then come June, which is where we are now, I will decide whether or not it makes sense to cut bait or not. This is that time. One thing, for example, is FICO. I've been a very big supporter or investor in that company. You guys know I've held FICO for years. I've been trimming a little bit and taking gains off the table. But if you were to look at a chart for FICO right now, that stock has started to tank. Time for me to get out. Spoiler alert, I'm going to sell probably all of FICO right now because it's starting to fall off. Time for me to take all of my gains off the table. I was up, I don't know, 40 or 50% on that one at one point. Not no more, right? So taking a step back and say, look, what's going to happen is going to happen. I'm just going to say, I'm going to check my portfolio on this date and this date, or up to 4 times a year, to take you out of it and make things a lot more simple. Whichever approach works best for you, but that's the thing that is internal. I control what I'm going to do with my portfolio. I'm not letting all the news cycle influence me and tell me what I need to do. I say, look, I see what's going on. I don't like what's going on, but I don't move until June. And then, and only then, will I absorb all that's happened, predict as much as I can, right, and think about what can happen between now and December, and then start to make those changes, and then the process and cycle starts all over. That makes it real simple. I just explained what I did just then in less than what, 12 seconds? Your strategy doesn't need to be an entire book. It doesn't need to be, it don't need to be this, all right? I don't like that book. But you guys get the point here, and we can talk about that book later. But simplicity is your absolute friend in a time like this. If you want to know more about index funds and other investing strategies that can be helpful, especially right now, this is a video that you want to watch next.